Hello, I'm Jason Stronghead. Today I'm sharing with you why is it that the unemployment rate is so high, right? And the market continue to rally. Is this rational or not rational? Stay tuned. A lot of people, they hate the recession. And the reason why they hate the recession is because of unemployment. Because it is inevitable that whenever there's a recession, the employment rate will go down. That means a lot of people will lose their job. And this is very, very hurtful. It's very, very scary. Even those who still have their job intact, they are also very worried that they will be losing their job very soon, which is the reason why a lot of people hate recession. And since a lot of people hate recession and a lot of people is not going to have a job, so is it possible that when the unemployment rate is up, the stock market can go up? And what is happening? So now let's take a look. Recession is hated. Every recession, it's hated because unemployment rises in every recession. This is inevitable. Okay, there's a huge spike in unemployment right now, a huge spike. So if you look at the unemployment in the US market, oh my God, it is the highest in the history, okay, for the last 50 years. This is the highest. So if it is the highest, which is the reason why a lot of people believe that this particular market plunge, right, is going to mimic the same as the Great Depression. However, take a look. With even 6.6 million more workers seeking for unemployment and a lot more millions they still haven't found yet. So the number they projected is going to be a lot higher. Why is it that the US economy is not in free fall mode despite the 32% unemployment projection, right? Why is the market still up? Why is that so? Unemployment rate is not a material stock market driver. Understand that. Now, why is that so? Okay, because if the unemployment rate is up, that means a lot of people don't have job, and a lot of people don't have job, then they got no money to spend in the economy. And if there's no money to spend in the economy, how can the economy go up? And if the economy don't go up, how can the stock market go up? Now, I want to share with you the correlation between unemployment and the stock market and also the economy. Okay, so don't be alarmed by this finding. Yeah. Now, in the last 10 years, unemployment stock market and the unemployment and stock market, the correlation is negative. That means there's no correlation. Yeah. When the stock market is up, unemployment rate, okay, and the stock market correlation is totally different. They don't go in sync. It's not like unemployment rate up, then the stock market will go down. No, it doesn't. Yeah. So even when the unemployment rate is down, unemployment is up, market can still go up. Yeah, there's no correlation. Now, why is that so? Because, right, the stock market can beat up ahead of the economic recovery. So if you check out my last few videos, I talk about when the stock market is up, it is a leading indicator that the recovery of the economy is on its way. Meaning, right, if the market believes that the economy is going to be recovering in the next 6 to 12 months, so 6 to 12 months earlier, the stock market will have already rallied. That's why, right, if you wait until the economy confirm its recovery, then you buy into the stock market, often it's really too late. Yeah, often it's really too late. And check this out, man. Okay, so the unemployment rate. Now it's very strange when the unemployment rate is above average. Very often, if you buy into the stock market when the unemployment rate is above average, that means it's very high. Normally your return on your investment for your equity will be higher. When the unemployment rate is low, strangely, your return on your investment is lower. Okay, so let's take a look at the percentile. Yeah, when the unemployment rate is above 9%, when the higher the unemployment rate, don't know why, your returns from your equities, right, will always be a lot higher. Can you see that? When unemployment rate is below 5%, your return is only 3.9. When unemployment rate is 5 to 7%, your return is 8.3. When the unemployment rate hits about 7 to 9%, your returns is 15.1. When your unemployment rate is above 9%, your returns for your stocks, that means the market can go up 24.5% returns. This is weird, right? Why is that so? Because unemployment rate and the stock market movement, it is not in sync. Yeah, they have no correlation, or you can say there's negative correlation. And when the unemployment rate is high, that means, right, it signal that the economy is at its worst. When the economy is at its worst, what goes down at its worst will come back up. That means, right, the stock market already foresee that, okay, unemployment is at its worst. That means, right, the economy probably gonna go back up. So if the economy gonna go back up, the stock market would rally first or last? First. That's the reason why, right? Okay. So you cannot use the unemployment rate to gauge how come unemployment rate is so high, and then the stock market still going to go up. It will come back down. Okay, so don't bet on it. Okay, not always you will be correct. Most of the time you're wrong. And if you see 92% of the time, okay, in 13 of the 14 bear market correction, right? Okay, or 92% of all the recession, the market rallies, right, despite the rising unemployment rate. Can you see? So many times, right? The market rally despite of the unemployment rate. And if you have bought in, okay, when the unemployment rate is at its highest, your return is always higher. Okay, a lot higher, much higher. So in other words, you can use the unemployment rate as and some form of a sign or indicator for you to understand, right, okay, is it the right time to buy and invest into the stock market? Okay. And have you heard of this thing? This is going to be strange to you. The economy can still grow when the unemployment rate is still up. They call it the jobless recovery. What do you mean by a jobless recovery? That means a lot of people still cannot find job, but the economy is still growing, you know. That means the economy can recover without unemployment rate improving. Okay, so let's take a look. Okay, in 1982, the bear market, right? So when the bear market ends and then the bull run started, so according to Daily News in 1933, the congressman called this recovery a jobless recovery. Why? Because a lot of people are still out of job. But how come the economy is still improving? And in the 1990 bear market, when it ended, so in 1993, according to Times News, the April unemployment rate data, it's a clear evidence that the market is growing despite the unemployment rate remains up. And in 2002, according to Boston Globe 2002, the nation, they mentioned that the nation is locked in what is essentially known as a jobless recovery. That means, right, the market rally, the economy is slowly improving, but the unemployment rate continue to stay in the same range. It's not improving. Okay, in 2009 bear market. Okay, so when the market finally and the stock market plunge finally ended and the bull run begins, according to Reuters 2010, they say that we are in for another jobless recovery. So is there a possibility that a lot of people are still unable to find job, but the economy is recovering? The answer is yes, there's a possibility. Okay, and the economy can grow on unemployment. Why is that so? When people cannot find job, how can the economy still grow? Now, here's the reason why. Okay, I don't know whether you can relate to it or not. Yeah, has it ever happened to you before? You are working in a company and you're working with a team of people. So in your team, yeah, some people quit their job. Yeah, don't say they have been laid off. Some people quit their job. After they left their job, so by right, your boss is supposed to hire a replacement, but your boss didn't. And in the end, right, your team member, so let's say you have a team of 5 people, one person left, and your boss is supposed to hire one person to replace that loop, right, or the gap, but your boss didn't. So they take the one person's job and divide it among the remaining 4 of you. So all of you have to do more and still paid the same amount. So because of that, right, your boss now save money or lose more money. Will save costs. And when they save costs, their margin will go upward. So all your productivity go up, the boss margin go up. As a result, the business are growing and they are not spending as much money. And therefore, yeah, their stock reflection price will go up, correct? Then the economy go up. Correct, okay? So there's a possibility. There is a possibility. Yeah. And now when you think about it, okay, this is the time, right? A lot of people lose their job. And as a lot of people lose their job, is there a possibility right now that now the bosses or your superior, right, they are now very cautious when they want to hire because they want to keep the cost low. And when they are very cautious, they don't want to hire so fast, they don't want to hire back so fast, they will find a way whereby to maximize everyone's time. And a lot of people right now, they are afraid of losing their job. So whatever your boss gives you, you probably will want to do it, right? Okay, because you want to keep your job and you don't want to be in a vulnerable situation whereby you can become unemployed. And therefore, you will work very hard. And when the boss realized that, hey, in the past, right, I hired 10 people to do all my work. But right now, I only hire like 5 people or 6 people. I can get my job done as well. So do I still need to hire 10 again? I don't need one. And that's the reason why it is possible that the economy is still growing, the business is recovering with the unemployment rate still there. Yeah, so that's the reason why. Even when recession ends, right, unemployment can still rise. Now you understand the reason already. And even when the unemployment rate is up, the economy can still recover because the business can do well when they don't hire back all the people that lost their job. Yeah. So you have to understand that there is a logical rationale behind unemployment rate and stock market. There is no correlation, and doesn't mean that unemployment rate is up, then the stock market must come down. It is not necessarily the case. Okay, so I hope you have enjoyed this video again, and please stay tuned. I have got one bonus clip for you.
Before you eat, can you sanitize the box first?
For what?
Cause plastic, the virus can stay on plastic for 3 days.
Really? Yeah. Okay.
Yeah.